Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about LIFE360 Inc. Annual Report. LIFE360 Inc. offers a wide range of services through its technology platform. At the core of its offerings is the LIFE360 mobile application, which provides various features such as communications, driving safety, digital safety, and location sharing under a freemium model. The company also offers the LIFE360 platform, which includes location coordination and safety, driving safety, digital safety, and emergency assistance services. In addition to these services, LIFE360 provides several other features through its mobile-first technology platform. These include place alerts, individual driver reports, crash detection, battery monitoring, SOS help alerts, family driving summary, and customer support. The company also offers Tile hardware tracking devices that can be used to locate lost devices, with two paid subscription options, Premium and Premium Protect. Furthermore, LIFE360 provides Geobit subscriptions and wearable location devices for young children, pets, and seniors. These services are designed to provide additional peace of mind for families and individuals who want to keep track of their loved ones or valuable items. The company sells its products through various channels, including online retailers, brick-and-mortar stores, and distributors. The list of businesses and services provided by LIFE360 includes mobile application with features such as communications, driving safety, digital safety, and location sharing location, coordination and safety services through the LIFE360 platform Tile hardware tracking devices for locating, lost devices Geobit subscriptions, and wearable location devices for young children. Pets and seniors Premium and Premium Protect subscription options for additional services, customer support, and emergency assistance services. Unfortunately, I do not have access to the text you provided. However, I can still provide a general essay on what might cause a stock price to remain stagnant over a period of time. The stability of a company's stock price is often influenced by various market and economic factors. One possible reason for LIFE360 Inc.'s stock price remaining unchanged in the past year could be a lack of significant news or announcements that would impact investor sentiment. This could include no major product launches, mergers, or acquisitions that would typically drive up demand for the company's shares. Another possibility is that the company's financial performance has been steady but unremarkable, failing to excite investors and drive up the stock price. This could be due to a variety of factors such as stagnant revenue growth, declining profitability, or failure to expand into new markets. Additionally, changes in the broader market trends and investor sentiment can also impact a company's stock price. If the overall market is experiencing volatility, or if there are shifts in investor preferences towards certain sectors or industries, it could affect LIFE360 Inc.'s stock price regardless of its individual performance. Lastly, regulatory issues or concerns about the company's business model or practices could also contribute to a stagnant stock price. This could include government investigations, lawsuits, or other forms of regulatory scrutiny that would erode investor confidence and drive down demand for the company's shares. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified through an analysis of various factors. On the growth side, subscription service arrangements have been instrumental in driving revenue upwards. The company's partnership with Aura Consolidated Group, Inc., has also contributed significantly to its revenue growth, particularly through subscription membership offerings and advertising partnerships. Geographic expansion has also played a crucial role in driving revenue growth, with notable increases in North America, Europe, Middle East and Africa, and other international regions. Additionally, the release of valuation allowance on U.S. and state deferred tax assets and recognition of previously unrecognized net deferred tax assets have contributed to the company's revenue growth. On the decline side, the discontinuation of a product line has resulted in a raw materials inventory write-off, while depreciation expenses have also had an impact on revenue. Furthermore, accrued vendor expenses and customer-related promotions and discounts have affected revenue growth or decline. Overall, the primary drivers of revenue growth or decline are a mix of subscription service arrangements, advertising partnerships, geographic expansion, and changes in deferred tax assets. The financial performance of a company has shown significant improvement over the past 3 years. In terms of net income, the company experienced a substantial increase from $28.2 million in 2023 to $150.8 million in 2025. This represents an improvement of $155.4 million from 2024 to 2025. The profit margins also saw a notable improvement. The gross profit margin increased from 73.1% in 2023 to 77.7% in 2025, while the operating profit margin improved from -9.8% in 2023 to 3.8% in 2025. These improvements can be attributed to various factors, including an increase in revenue and a reduction in costs. The company's financial performance was also boosted by a decrease in operating expenses as a percentage of revenue. Additionally, the issuance of convertible notes and positive net cash provided by operating activities contributed to an increase in cash and cash equivalents. These factors collectively led to the significant improvement in net income and profit margins over the past 3 years. The company's financial performance indicates a positive trend in operating cash flow over the past 3 years. In 2025, the net cash provided by operating activities reached $88.6 million, demonstrating a significant increase from previous years. This upward trajectory suggests that the company is effectively managing its operations and generating sufficient cash to support its growth. A comparison of the operating cash flows for the 3 years reveals a notable improvement in 2025. The $88.6 million generated in 2025 far surpasses the $32.6 million recorded in 2024, indicating a substantial increase in operational efficiency. Even when compared to 2023's $7.5 million, the 2025 figure represents a substantial growth of over $81 million. The positive operating cash flow is a testament to the company's ability to generate sufficient funds from its core operations. This trend bodes well for the company's future prospects and suggests that it will continue to be financially stable and capable of supporting its growth initiatives. The company's debt level and interest expenses have undergone significant changes over the past few years. In terms of debt level, there is a notable increase from 2023 to 2025, with total liabilities rising by plus 397% in just 1 year. However, it appears that the debt level has decreased slightly from $12 million in 2024 to $7.4 million in 2025. Looking at interest expenses, we see a substantial change as well. In 2023 and 2024, the company incurred significant losses due to interest expenses, with a high of $2,381 in 2024. However, by 2025, this number has decreased significantly, indicating a potential improvement in the company's financial situation. Overall, these changes suggest that the company is taking steps to manage its debt and reduce its interest expenses. The performance of various segments and regions in the market has been a mixed bag. On the negative side, Malaysia and China have struggled to keep pace with expectations, as evident from pages 20 and 41. The international region has also underperformed, according to page 20. Furthermore, Europe, Middle East, and Africa have faced challenges, as noted on page 89. In contrast, some segments and regions have shown significant growth. The U.S. market has been a standout performer, with online retail sales and product mix contributing to its success, page 62. International markets have also seen strong performance, driven by the same factors, page 62. North America has fared well, as indicated on page 89. LIFE360's management is optimistic about the company's outlook and strategy. The company has experienced significant revenue and income growth over the past 3 years, indicating a strong financial performance. To sustain this growth, LIFE360 is investing heavily in research and development to introduce new customer experiences and devices. The company plans to expand its international presence by increasing sales and marketing expenses, aiming to grow its member base and increase brand awareness globally. Additionally, LIFE360 is focused on expanding its offerings through acquisitions and product launches to boost adoption. This strategic approach suggests that the company is committed to innovation and growth. LIFE360's strong financing position, with net cash provided by financing activities of $282.1 million in 2025, further supports its ability to invest in research and development, working capital, and capital expenditures. While there is no clear statement on long-term strategy or outlook, the company's focus on maintaining its existing business model and investing in innovation suggests a commitment to sustaining growth and expansion. The company's financial strategy has been transparent regarding its dividend policy. According to available information, the company has chosen not to pay dividends to its shareholders. This decision suggests that the company prefers to reinvest its profits in growth initiatives rather than distributing them as returns to investors. Furthermore, there is no indication of share buybacks on the horizon. The absence of any mention of such plans implies that the company is focused on other priorities and has not deemed share repurchases a necessary or strategic move at this time. Concerns about inventory buildup and supply chain disruption are prevalent throughout the extracted summaries. One major concern is the difficulty in forecasting demand due to market fluctuations, which can lead to excess inventory levels and resulting write-offs, page 16. Furthermore, relying on a single contract manufacturer increases the risk of production delays and additional costs if there is an interruption, page 18. The supply chain itself is also vulnerable to disruptions. Insufficient product supply, inventory buildup, and disruption in supply chains from key regions such as PRC and Malaysia are major concerns, pages 19-20. Additionally, uncertainty in PRC's legal system and disruption from Malaysian facilities can impact the ability to fill customer orders. Other potential issues include surplus inventory due to unexpected sales decreases during traditionally high-volume periods, page 23, increased frequency and severity of supply chain attacks compromising third-party infrastructure, page 30, and volatility in international trade regulations, including potential tariffs on products manufactured in Malaysia and PRC, page 41. Seasonality also contributes to surplus inventory concerns, page 51. Overall, the extracted summaries highlight significant concerns about inventory buildup and supply chain disruption, emphasizing the need for careful management and contingency planning. That concludes the financial summary for Life360 Inc. Feel free to comment below, and I will be happy to answer them when possible.